If you don't learn how to read multi-time frame analysis, you're never going to be able to increase your strike rate. You can't just expect to use one time frame and understand the market overall direction. So this is what I do. Here we can see that price has already reacted. So all we're going to do is go left and we're going to look for a representation of a sideways range followed by initiation to the downside. That's the first part of the RIMC model, range, initiation. When we pull back into this range here in the future, we want to see price slow down and then look for continuations away from this previous sideways range. Because this sideways range is initiated to the downside, that is showing it's a sell range, which means when we get back into this area in the future, we're going to be looking for bearish trending markets, bearish continuation markets. So I'll put a ray line on this high and we'll find out where price has reacted from. So this is where we're reacting from. Very clearly, we can see that price is contained between this low point here and this high point. All we're doing when we're looking for a sideways range is the highest point, the lowest point before the breakout to the downside. That's a representation of a sideways ranging market and initiation to the downside. So now we're back here with current price. What can we see? Price has run above this high, didn't extend. That's showing that price is slowing down at our point of mitigation. So now when we zoom into our entry time frame, all we're going to be looking for is representations of continuations. That's going to show us that price wants to move in that direction. And this is how we can utilize higher time frame, being just one higher time frame and a lower time frame, something like a 15-minute chart or a 1-minute chart, to understand how to trade the overall higher time frame direction. Now, the reason that I use the higher time frames first is because this move that we're seeing, even if we're wrong with the overall direction, we can already see prices move 300 pips. That's plenty to get a 40 to 60 pip move out of the market to make some profit, or multiple 40 to 60 pip moves, which is why I always start on one higher time frame and utilize lower time frame continuation structure to show me the overall direction of the market. A very simple process that you can apply to your trading to increase your strike rate.